Hey, this is Warren Redlick. I want to talk about my bear case for Tesla in 2030. I know a lot of people hear me called Ultra Bull, and I have these really high valuations I predict for Tesla if it reaches, Tesla bot and Robotax and everything. But let's talk about my bear case. Are you ready? Let's go. So for starters, in my bear case, there's no Robotaxi. There's no Tesla bot. And there's no AI training. A big thing that ARK Invest has talked about that I think is real is if Dojo is successful, Tesla will actually have a business in AI training supercomputers. None of that's there. I'm imagining a world of only 2 terawatt hours of products from Tesla, or only 10 million vehicles are going to go through both of those scenarios. Tesla has said that their target is 20 million vehicles in 2030. That's both Elon and Robin Denholm, and basically the company projection is they're going to deliver 20 million vehicles in 2030. I actually think Robotaxi changes that, but we're taking Robotaxi out. And then 2 terawatt hours of products. Tesla's projection at Battery Day, and something they've reaffirmed, is 3 terawatt hours of products. That's products containing 2 terawatt hours of batteries in them. A typical Tesla car might have an 80 kilowatt hour battery pack. A Model 3 long range, a Model Y long range has an 82 kilowatt hour pack. Some vehicles have 60 kilowatt hour packs. My Model X has a 104 kilowatt hour pack. So ballpark 80 kilowatt hours. If you have 10 million vehicles, that's 800 gigawatt hours of product. And then you would have 1.2 terawatt hours of other products to get you to 2 terawatt hours. Or maybe the cars would have a little bit more than 80 kilowatt hours per vehicle at that point. So that's a couple of ways of thinking about what a bear case might be. Instead of 3 terawatt hours, only 2 terawatt hours. Instead of 20 million vehicles, 10 million vehicles. No Robotaxi, no bot, no AI training, no other special revenue for Tesla out there. Just on that, how does Tesla do in that scenario? What do you think? Here it comes. So I'm going to start this with the 10 million vehicle scenario, and I'm going to make up a number and say the average selling price is $60,000. I believe currently Tesla's average selling price is higher than that. It's certainly possible that in order to achieve 10 million vehicles globally, they're going to have to lower prices, and maybe the average selling price ends up being 50,000 or 40,000. But I'm going with 60,000 for now, and we can argue about that later in the video. I'm predicting a gross margin of 30%. Again, I think this is low. I think Tesla has already demonstrated they can achieve gross margins of over 30%. I think the Shanghai factory, they may be achieving 50% gross margin. But let's cut them back and say the best they can do is 30% gross margin. $60,000 a vehicle times 10 million vehicles, that's $600 billion in revenue. With a 30% gross margin, that's $180 billion in gross profit, and that leads to $100 billion in net profit. Roughly. These are rough numbers. These aren't firm numbers, but this is a good ballpark napkin math approach to what happens to Tesla in a bear case. And we're going to see where this leads to in share price in a minute. And keep in mind, this is no energy products. This is the only product Tesla sells is cars. They don't sell solar. They don't sell Powerwall. They don't sell Megapack. They don't sell PowerPack. They don't sell Robotaxi. They don't sell Bot. They're not making money on FSD because the $60,000 average selling price, that's not FSD on every car, because FSD is $12,000 a car right now. So this is pretty pessimistic compared to the 20 million vehicle goal and FSD on every car. This is falling way short of what the goals that Tesla has set. What if we look at terawatt hours? You ready for that? On Battery Day, Elon and Drew Baglino talked about 3 terawatt hours, that the world would need 30 terawatt hours of products produced in 2030, and Tesla would do 3 of that. I thought that Tesla was really aiming for 6. I think the 3 was sandbagging, but I have heard them reiterate the 3 terawatt hour number since then. So let's say they're going for 3 terawatt hours and they only achieve 2 terawatt hours. Now I know that's, some people say, well, you're not being bearish enough, but CATL is ramping lithium iron phosphate production, and Tesla is their biggest customer. LG Chem is ramping their battery production, and Tesla is their biggest customer. Panasonic is ramping. Samsung and Panasonic and LG Chem are making 4680 cells. There's only one customer for that. And Tesla's ramping its own battery factories. They're developing and or ramping their own battery factories for 4680. And there's a lot of batteries coming online. I think 2 terawatt hours is very pessimistic, but let's run with that. 10 million vehicles at 80 kilowatt hours each is 800 gigawatt hours. So this assumes there's 1.2 terawatt hours of energy products. You can flip this however you want to. I've suggested in this slide revenue of $500 a kilowatt hour. Now, if you look at a hypothetical Model 3, that has a $30,000 price and has a 50 kilowatt hour pack, it's $600 a kilowatt hour. Now, reality is a Model 3 right now is $50,000 with a standard range Model 3 is almost $50,000 with a 60 kilowatt hour pack. So it's closer to $800 or $900 a kilowatt hour. So I'm being very conservative here with revenue of $500 a kilowatt hour. Also, Megapack, $2 million for a roughly 4 megawatt hour pack. That's $500 a kilowatt hour. I'm being completely reasonable using $500 a kilowatt hour. I don't think I'm being crazy here. Now, $500 a kilowatt hour is $500,000 a megawatt hour, is $500 million a gigawatt hour, is $500 billion a terawatt hour. If you do 2 terawatt hours at $500 billion a terawatt hour, you get $1 trillion in revenue. Again, go with gross margin of 30%. I think Megapack gross margin long run is going to be higher than that. If a Megapack costs $2 million, and the lithium iron phosphate cells that go in it, 4 megawatt, really should work out to $400,000. Even if you get Megapack's price produced at scale to $1 million, you got 50% gross margin on Megapack. So again, I'm pushing gross margin to 30%, like I did in the previous thing on vehicles. I think this is very conservative, have a gross margin of 30%. What do you end up with? You've got $1 trillion in revenue, 30% gross margin, you've got $300 billion gross profit. Ballpark, that's $200 billion in net profit. Again, these are ballpark numbers. I understand you can flex them a little bit, but you get where I'm going. You can flex them the other way. You can say, Warren, you're being too generous. You can also say I'm being too conservative. So let's go with $200 billion in net profit. What do these numbers, the vehicle numbers I showed you before, and the terawatt hour numbers I showed you just now, what do they translate to in terms of Tesla's share price? So let's look at just the vehicle scenario, 10 million vehicles, $100 billion net profit, and let's assign a price earnings ratio of 50. This assumes that Tesla is still growing at 10 million vehicles. It's not that Tesla reached 10 million vehicles and that's the most they'll ever do. It's just they didn't achieve the growth rate they were hoping for. And they're still growing, and they're not growing as fast. A price earnings ratio of 50 is not fast growth compared to where Tesla is now. But at a price earnings ratio of 50, you see Tesla with a $5 trillion market cap and a $5,000 share price. That's my bear case for 2030. If Tesla makes only 10 million vehicles in 2030, makes 0 energy products, 0 robotaxis, 0 bots, 0 AOI training, there's no other magic revenue out there for Tesla, and they're still at a $5,000 share price. If you say, wait a minute, Tesla's still going to sell energy products, and you can see the lithium iron phosphate cells are being produced. You can see the markets there for Megapack and Powerwall. If you say 2 terawatt hours of products in 2030 and a $200 billion net profit and a price earnings ratio of 50, because again, we've limited Tesla a lot. They're still going to be growing at 2030 if this is where they're at. You end up with a $10 trillion market cap and a Tesla share price of $10,000 a share. So in other words, my bear case really for Tesla in 2030 is like $10,000 a share. Now, I'm willing to say, let's be a little more conservative. Let's bring the price earnings ratio down. Let's find some other limitations. And maybe you get to a Tesla share price of $5,000 in 2030. Well, we're trading at $1,000. We're trading at less than $1,000 now. And it's 8 years away. You've got a 5X. And that's like the worst case scenario. That's like robotaxi never happens. Bot never happens. They don't attain anywhere near the growth they talked about, and you still end up with a $5,000 share. You still get a 5X in 8 years. This is still like the best investment you can find in the world. And really, the 5,000 is ridiculous. It's really a $10,000 share price, and you've got a 10X, more than 10X in 5 years. Tesla is a fantastic investment. But let's talk about something here. What are some what-if scenarios that might lead to different conclusions about Tesla? Let's talk about that next. So here are some what-if scenarios I keep hearing people talking about. If you have other what-if scenarios, please put them in the comments below and maybe we can address them. And I think I'm going to do a live stream where I invite people to suggest what-if scenarios about what, something bad happens. The number one I keep hearing about is, well, what if China invades Taiwan? Well, first of all, China's not going to invade Taiwan. This is the United States. This is Americans projecting American behavior on another country. China doesn't have a history of invading other countries. We do. America invades other countries. China doesn't invade other countries. What country has China invaded in the last 30 years? We've invaded, 10, 15, 20 countries in the last 30 years. Why do we assume that China's going to behave like we do? China doesn't have a history of it. Their military isn't really prepared for that kind of behavior. They don't have the experience of successive invasion, and it's not the way China operates in their international relations. There is a sinister side or a sinister view of Chinese behavior in foreign relations, but it's not invasion. China's, the sinister story about China, and I'm not sure I buy that it's that sinister, is called soft power. That China gets involved in other countries in other ways. They influence politicians like they seem to be influencing some part of the American political sphere. They get entrenched in other countries. They get their business interests in other countries. They start buying off local people, and they start getting influence in those countries. You could easily see China doing that in Taiwan. I think Taiwan is very likely to resist that. They're probably more likely to be successful at resisting it. But ultimately, if China wants to get their way somewhere, what they do is they insert agents or other people, they start buying people, and they use that to develop influence, and they push policy in the direction they want, rather than dropping bombs on people, which is the American way, not the Chinese way. So I think it's a little silly to suggest that China's going to invade Taiwan. And let's go with most of these scenarios, like the global nuclear war scenario. I threw that one in there. Most of these scenarios, except for the Elon disappears scenario, the China invades Taiwan, Russia conflicts expands, there's a global... All of these scenarios are bad for everyone. Right? This isn't just bad for Tesla. You know, the same thing with like the China supply. What if the China invades Taiwan and it dries up the supply chain? That's the biggest consequence of China invading Taiwan is supply chain issues, and there aren't bigger consequences from China invading Taiwan. But if China's supply chain dries up for whatever reason, that's a problem for the whole world. Now, Tesla is working on developing local supply chains for their businesses. So if Tesla loses Giga Shanghai, but they've got Giga Texas, they've got Giga Berlin, they add 2 or 3 other Gigafactories by the time these bad things happen, then losing Shanghai is bad, but Tesla will survive reasonably well if they build local supply chains for their Gigafactories, which is what Tesla has been focused on doing. Other companies aren't really doing that. Other companies are hit much harder if there's a supply chain issue in China. We can see that Tesla is working on building those local supply chains, much more advanced than other companies. So if you're choosing an investment, yeah, that means that Tesla's share price doesn't go up as much as I'm hoping. But if you're choosing where to invest and the other companies are all going to collapse and Tesla's going to survive, I'd rather be with the company that survives than the company that collapses. It's not like you're just investing in a vacuum. There's other choices of where you're going to invest your money. Another what-if scenario I hear a lot, and we saw Gary Black bring this up at the Tesla annual shareholder meeting, is what if Elon disappears? Certainly a big risk if Elon disappears. I view Elon as an accelerator. Tesla is already on the path to massive success. Same thing with SpaceX, by the way, and the Boring Company. Tesla, SpaceX, Boring Company. I'm not sure about Neuralink, but those companies are already well on their way to success. Elon is helpful. Elon is a driver of innovation. Elon is able to make big choices that other leaders can't make. But the practical reality is Tesla has figured out how to manufacture cars better than anyone else. They have figured out how to do AI and self-driving better than anyone else. The teams are in place to continue Tesla's success. It's unlikely that Elon's disappearance would stop that. Drew Baglino and Zach Kirkhorn are perfectly capable of running the company together. Maybe there's somebody else in the company that steps up and participates as well. But they know the game plan. It's a company with a mission. Everybody's on board with the mission. They all work hard. It would reduce Tesla's likely success or decelerate Tesla's success. But Tesla's already the best car company in the world. They're already the best energy company in the world. They're already the best AI company in the world. And they're not going to lose that simply because Elon disappears. They just won't grow quite as fast. The last what if is, what if the competition comes? So Tesla is the competition. Internal combustion engines are the competition that Tesla's taking on in cars. The current energy system with fossil fuel power plants, which is a mess with peaker plants wrecking things and all these issues. Tesla is the competition that's stepping in and competing against the established industry. And yes, CATL is probably going to make something comparable to Megapack, and LG Chem and maybe Siemens or somebody else will make something comparable to Megapack. Yes, other companies will come along and make decent electric vehicles. Nobody's close to Tesla yet, but there are companies that are making decent EVs that are better than internal combustion engine vehicles. But 98% of the market is internal combustion engine vehicles. So if competition comes along, that's great. We displace internal combustion engine vehicles quicker and we breathe cleaner air. This is a great thing. It's not competition for Tesla. If somebody else makes an EV, it only has to be better than internal combustion engine vehicles to succeed. It doesn't have to be better than Tesla to succeed. Because Tesla's not making it. Even if Tesla succeeds at getting to 20 million vehicles a year, there's another 55 million vehicles a year that need to be replaced. New vehicles a year that need to be replaced. So there's plenty of room for competition to come in without taking any business from Tesla at all. This notion that somebody else is going to make an EV that's competitive with Tesla misses the point. Tesla isn't their competition. Internal combustions are their competition too. and they will take market share from internal combustion engine vehicles before they take market share from Tesla. Yes, somewhere down the road, if there's enough competitive EVs out there, then we can compete over that space, but that's after 2030. That's not happening before 2030. Nobody else is scaling production of EVs to the extent that Tesla is. Who's out there? Who's the competition? Who is this competition? As far as Megapack goes, the demand for Megapack is huge. The demand for Powerwall is huge. If the other companies come along and do that, that's great. That gets us off fossil fuel electricity quicker. That gets us to a more stable grid quicker. This is all good for society. It means a better economy for America, for the world, and we're all better off. And it doesn't cut into Tesla's success. It actually makes the world better. And really, if you have a more stable grid and you have lower energy costs, this accelerates the economy, it increases growth, and it creates more opportunities for companies to succeed. So those are the what-if scenarios I thought of. If you have other what-if scenarios, put them in the comments below, or watch for this Sunday's live stream where I'll take on your what-if questions and we'll have a great conversation. Please check out my other videos, support this channel on Patreon, on Locals, as a YouTube channel member. Check out the t-shirts at elonbits.com. Please subscribe to the channel, and thank you so much for watching.